Hey everyone, hope you're having an awesome day. What a week we've got ahead of us. We've got the election, we've got the FOMC, which is really huge as well. We look at rates fall just going absolutely bananas. Is it election? Is it FOMC? Is it something else going on the debt front of things, right? There's some big things happening out there that are finally starting to catch up, I think, from a volatility perspective. So we're not exactly sure. We have an idea of what's influencing fear markets because they're very high right now, especially in that rates area. So let's talk about a couple of things here. Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. Let's look at Kamala making a bit of a jump back lately. So we had Trump start to jump out ahead of the game in some of these polls. Now, some of the regular polls really had them neck and neck, or even Harris ahead recently, but those tend to be the more like Ipsos polls, and we've sort of become accustomed to being a little bit skeptical of those kinds of polls. People are starting to put a lot more faith in the betting markets, right? Poly market, things like that. Predict it. There are some betting markets out there. Now, we don't know how deep those markets are. Can they be influenced by a large whale type trader, a big trader? We're not exactly sure. But consistently across all of these markets, we've seen really pronounced leads by Trump. Suddenly, that has run right back again. So let's take a look here. Polymarket odds, we can see that Harris has just made a massive move back up. And here's your Iowa poll to compare with the poly market, and this is starting to look neck and neck again. Very interesting. And of course, the VIX is reflecting that. It isn't really going much higher, but we're sort of sitting around that 22, 23 level, which is high enough considering the market really isn't doing anything. So here's your VIX level versus the S&P index historical vol, the 10-day vol. So all that means is how much are markets really moving over a 10-day rolling period. And we are looking at 3 times the level of actual movement. And you don't see that very often. You can see we go back to 2021, late 2020. That's the last time we saw something like this. So this is very elevated fear levels. This is nothing new if you've been watching my stuff or watching, other people who talk about this sort of thing. So there's some crazy stuff happening. So are they worried about Kamala versus Donald in particular? Well, we don't know. I mean, realistically, if you step back, of course, everybody can get sort of lost in the noise in the trees, the forest for the trees. Remember, we're all stuck in these trees a lot of the time and trying to trade markets from minute to minute, hour to hour. Sometimes we have to step back a little bit. We can see that regardless of red or blue, markets tend to do well. In fact, Democratic markets, I think the 3 biggest runs have been Clinton, Biden. So some of sure, there's some stimulus in there and things like that didn't exist in the old days as much. But Democrats have done better for stock markets. So all this talk of Trump being so fantastic, let's take it with a grain of salt. So here's some of the probabilities that we've got here. Vol market currently pricing in a pretty big move. I think it's pretty fair, right? I think we could get really giant moves. Now, there may be a little bit of dispersion. What that means is some things are going to move up, some things are going to move down, and your overall effect on index may not be as pronounced, right? You've sort of got things moving around underneath the hood, but the overall index may be less muted, and that's not unusual for markets, but we may see a little bit of that. So we've got some predictions here from Goldman Sachs. Trump with a Republican sweep, S&P up 3%. Trump with a divided government up 1.5%. Harris with a Democratic sweep down 3%, which is the worst outcome that they see. And Harris with a divided government, 40% probability of a down 1.5% move. Now, I don't know if this is particularly bad. I think they're overdoing the negativity towards Harris, but we're seeing some moves out there, right? We're seeing solar names really pop today. I'm looking at a couple plays in our community. Massive vol on things like First Solar has had a big jump. There might be some interesting things to do in there in order to capture that big volatility. Remember, when vol's very high, you've got to do different things. You can't just run out and buy some out of the money calls. When volatility is at the 100th percentile, you got to be really more careful. You might have to go call spread. There's other things we can do. I'm going to take a look at the skew. Maybe we could do a 1x2 put spread, capture a little bit of income and some of that downside potentially. If Harris doesn't win, then you get a little bit of a dial back in those names, and you can make money a couple of different ways. So all sorts of fun things to watch there. And it's going to be really, really interesting. If we look at how markets have done, I just wanted to show you guys this. Over the last year or so, we've had this incredible rally. Everybody knows markets are up sort of 35, 40%. The amazing thing is that this has happened in a realized volatility of 12. What that means is the market has not been really moving very much, has not been shaking people out very much. I know there have been a couple of periods, April, July, August was horrible, but overall over this period, it's been kind of easy to be an investor. You really haven't had too much reason to get nervous. If you missed August 5th, if you weren't around for a couple of days or didn't watch the news, things sorted themselves out fairly quickly. So more quickly than they ever have in history, really, in some cases. We've seen these VIX spikes happen and go and they're gone and markets come back, right? Can we expect that going forward? Well, can low volatility persist? We've seen one of the most incredible low vol upward moves that we've ever seen in history. It's only happened a few times in history, and here we are again at one of them, which is, we call that sort of a risk adjusted return, right? How much risk have you had to bear in the face of the gains that you have? That's called risk-adjusted return. That's kind of your an idea of how much risk you have out there in investing in equities, and it's been very low risk right now. But does that mean we're on the cusp of higher volatility? Well, it could be, right? You might look at this and say, well, I think we can't just be sort of going straight up with very few sort of pullbacks forever. Well, that's probably true, but let's look at history in 95, 97, some of these other periods where we did have similar rises with low volatility. The next years were low vol as well. Now, if we could jump down into the weeds a little bit again, the last two Halloween's earnings seasons have been some of the highest in history in terms of volatility. So there is volatility underneath the surface. You have to be good at certain names in our community. We try to get into areas and sectors that have tailwinds behind them. And I think really that's half the battle, right? Staying away from crappy trades is as good as getting into good setups and good trades. We can't always be perfect, but we have to try our best to stay away from the big piles of you-know-what. So let's keep going here. Markets, of course, look at the rates. The rates vol is off the chart. So we haven't seen rates vol like this in decades versus the movement in the market versus the VIX. Rates vol is off the charts, right? So people are nervous about something. What are they nervous about? FOMC, election, et cetera, but also debt. I think this is finally coming to a head to some extent. And the problem is nobody really wants to pull back on debt. Here, your Trump plan, you're going to spend a fortune. Harris plan, you're going to spend a fortune. Not as bad for Harris. Maybe this can be a positive, right? So everybody's a bit negative on Harris winning, but maybe this is a little bit of a positive in a sense, because you won't get this ridiculous sort of spending. That it remains to be seen, and it remains to be seen whether one or the other candidate, whoever wins, has to face some tough decisions at some point here, because we can't keep going like this. We can't keep going and spending the way we've been going. So we've seen the market ever since that 50 basis point cut by Powell. Guess what it's done? It's gone up 70 basis points. Is that normal behavior into a series of rate cuts? Of course not. This is the market saying we do not believe what's going on here. We think there's maybe inflation on the horizon. We think there are debt problems. We think there are going to be potentially problems with markets absorbing new debt issues, things like that, keeping things up. So I think up around 440, 450, Samantha LaDuc and I have talked about this, that's a danger range, right? I think as long as we're around 450, 440, or maybe even higher, I think that's a danger zone for stocks. I think it's a danger zone for volatility. So I think volatility is going to get crushed over the next week, but I'm not betting my life on it, because if we continue to see, if you guys can go ahead and look at the MOVE index, MOVE, this is going to give you an idea of rates fall. And so if we do not get a compression of rates fall after this week, I would say there is a great deal to be worried about, because then that means there's something more insidious happening below the surface. That's a big if, because we should see a compression of vol, but that is going to be a sign of something very, very unfortunate potentially going on below the surface, and I think you're going to have to watch out for that. I'm starting to collar some positions. I'm recommending to members in the Discord to do some protective things. So, let's be on high alert. This is not everybody's looking for this year-end rally. I'd like to say everybody and their shoe shine boys looking for the year-end rally. That's starting to make me a little bit nervous when that's massively consensus. So let's look what happens on the gamma side of things. What do we have here? So we've got short gamma issues, bit of short gamma in here net, but it's really not that big. So sometimes you'll see me come out and say, whoa, we got some huge gamma here. We got to really pay attention to. Not much going on. So we'll see. After the roll-off, it starts to look like this, which isn't that impressive. So basically, this week, you've kind of got a bit of negative gamma, which means that can exacerbate volatility. If the market wants to get going one way or another, it could be pushed as the accelerant of negative gamma pushes those moves. Now, if we get high enough into that 5,900 range, then we start to get into positive gamma. And look, if the election is over and the market takes it positively, what we're going to see is a hammering of volatility. People are going to be hammering upside calls. Dealers are going to be, they call it dealer stuffing, right? They're going to get their early stocking stuffers. They're going to be buying tons of calls, tons of premium, and the market makers are going to be running for cover because we could enter into a very, even after the election, a slower period, kind of maybe a slow march up, but certainly nothing too crazy. So, and then if we get really, really high, we get into the JPM collar and all that. So maybe we get that melt up, but I think it's going to be tempered by a lot of So, and also what happens is as realized volatility comes down, meaning our market movement, it's going to relax. I mean, we're going to get some crazy swings this week, but overall, maybe we don't get that much movement in one particular direction or another, but then realized vol is going to come down. They're going to start crushing volatility levels. I'm looking for VIX to come down into the teens again. And then volatility targeting strategies are going to have to get in as well. So let's talk about some positive. We've got volatility targeting, which means as volatility comes down, there are mandates out there that have to start buying stocks. We call them vol targeting. We also have synthetic gamma. So let's talk about synthetic gamma. These are things that can act as accelerants as well. Let me find my little synthetic gamma here. So sneaky accelerant, right? This isn't part of the official gamma levels, but look at how big these inverse and leverage products have become. Massive AUM. These are products that need to rebalance at the end of the day, and they buy into strength and they sell into weakness typically. So what that means is there's an accelerant there. A big move could be accelerated by these products as well. So you've got your typical gamma profile out there, then you've got this sort of synthetic sneaky gamma profile as well. So that can work both ways. So if we do get a reason to sell off down into below 5,700, we could enter into a slightly accelerating sell-off type scenario. So we're going to have to see how that plays out. That's not my base case. I don't think that's going to happen. But we'll have to see how that plays out. But what do we have helping us? Well, we've got seasonality. Here we go. Buyback window is open. People are going to be feeling good. There's going to be a lot of uncertainty. Markets don't necessarily care as much whether it's Trump or Harris, but they're going to care that the event has passed, right? It doesn't really make sense all the time intuitively, but it's just that not knowing that matters. Even though that overall it really doesn't matter whether Trump, whether red or blue wins. Over time, the market will do okay. Now, is that the case this time? Well, it typically is historically. So we have that bit of data on our side. So we're going to have a market that's already in its strong seasonal period, and we've got buybacks. Look at these buybacks. The window opened around October 28th. You've got big buybacks here from GS's corporate desk. November tends to be the largest execution month of the year. So you've got this big tailwind behind you from buybacks. Massive 960 billion worth of executed buybacks in 2024 and 100 billion more slated. So big buybacks potentially coming in these markets. And where do those buybacks, where do they go? Well, they go into big tech. That's where most of the buybacks are concentrated, in big tech. Here's your announced buybacks. Those are the companies with the cash. They're the ones who are buying back stock. So I wouldn't get super negative on technology regardless of the candidate, because these are the companies that make the most money. You back out the bottom 490 and they barely make any money. So here are the companies that really, really are driving earnings growth, cash flow, things like that to a large extent. They've got massive corporate buybacks behind them. Yes, they are battling this over here on the right, which is, the top 10 stocks of the S&P 500 are reaching new highs in terms of concentration. That is some concern, right? They're battling this. This is cautious. This is caution for us, because the market is just getting more and more concentrated in those names. But that in itself isn't necessarily negative. It just is what it is. What is positive is that these stocks are buying back their own stock. They're cannibal companies, and that's good for shareholders. So you can see these. This is your buyback basket by Goldman Sachs. It does better than the typical basket of stocks. Okay, so you've got that. Plus, you've got one more thing I wanted to show you, which is underweight. So managers are underweight this market. Look at them, heavy duty underweight. Let's compare it to 2020, election years, 2016. 2016 kind of petered out towards the end of the year, but still positive. We have 2020 that was fine, did okay. Look at where we are in 2024. They are not guessing correctly. Again, they never do almost every year. The analysts are wrong, the houses are wrong. Some people are very bullish. There have been a few houses out there that have gotten this right, but people are under invested. So we've got a lot of potential tailwinds. We're looking at things in the community. We've got a downside fly. I just did the meat part of it. I bought the November 19 puts last week for around 150. They're up to 180 now. And I've used that opportunity. I had this feeling that volatility was going to continue to expand, that the VVIX, the vol of vol, was going to expand. And even though the VIX hasn't come down very much, the whole complex has gotten pricier, has gotten more expensive. I've used that opportunity to sell my 16 puts. We bought the 19 puts. We're going to sell the 16s. We also bought the 13s last week. So I've got a really, really cheap fly on, looking for that vol crush. I hope I get it. We covered the Tesla calendar. So I had a calendar on there. I'm going to do a separate video on this, which I'm going to call something like, turning lemons into lemonade, because this was an amazing, we got some good luck. Luck's always part of it too, but Tesla came back down in this particular structure, and that allowed us to take this off for a 67% win. Uber's been a little bit frustrating. It's come back from 85, 86. Not happy about that, but I've been selling some covered calls. That helps a little bit, but not that much. But my cost on Uber is 59.25 and 71.24, so well below where we're trading right now. And of course, we closed our Meta at McDonald's recently for really, really good gains. We've been playing things really well. It's a little bit scary. Can't expect that all the time. Look into crushthepremium.com/training. You can jump into the community. We have incredible education. I'm in there. I'm teaching people. I'm guiding people. We've got charts. We've got a pure vol strategy. We've got stock strategies. We've got incredible research. I mean, it's just an incredible community. And you also get discounts into my programs as well, my video programs, my live programs. So the offering is really incredible. Come check it out. In the last 10 days, 54.96 in profit on our closed positions in just the last 10 days. So I'm not going to guarantee that I can do that every 10 days. Absolutely not. I'm not going to do anything like that, but in terms of guaranteeing that. But we're always looking for opportunity, and we're going to strive to continue to do to point out some great trades that I'm enjoying, and hopefully everybody else is enjoying and learning from. So anyway, good luck this week, guys. I'll be back with another video, but it's going to be a real barn burner, and stay safe. Talk to you later.